We saw a funding announcement from the Biden administration yesterday, but I do have to ask you, since these bills were signed into law, a couple years ago, months ago, why isn't this already priced into the market? I mean, the market knew that eventually these projects would be funded. Why did we see this pop, for example, from the IFRA ETF yesterday of more than 1%?
Yeah, sure. I think that there was initially some skepticism that the dollars would actually be spent. And then there's always, some wait and see when they actually show up. Government dollars that were allocated back in November of 2021 are still just barely materializing. The other big phenomenon was last year, diesel costs. In the last 2 years, actually, diesel costs exploded. So the companies weren't able to pass through prices as quickly as their costs rose or barely were keeping up. I think those are the two biggest things that kept the stocks from performing well from the get-go.
All right, so a lot of this money is going to be spent on roads and bridges. Give us a sense. What companies really benefit from this, and how big of a tailwind is it?
Yeah, it's a pretty big tailwind. We cover companies in the building materials space. We cover Vulcan, Martin, and Summit, and then we cover some steel names as well that benefit on the rebar side. But it's definitely a positive. I think what the market's been in wait and see mode on is how much it offsets weakness in residential, which is also a big market for these companies. And now that it's clear that residential hasn't collapsed like was feared at the beginning of the year or late last year, I think it's become more evident that there's upside to numbers on the volume side.
All right, so let's get to some of your picks. One of them is Martin Marietta, another one Summit Materials. Outperform ratings for both of those names. Those are two names that we've been really talked about as one of the primary or two of the primary beneficiaries of these bills and this funding. Give us a sense. Obviously, it's revenue, but is it high quality revenue? I mean, working with the government oftentimes can be difficult, challenging. We see a lot of companies say it's a little bit lumpy.
Yeah, I think lumpy is a fair characterization, especially for some of the IRA projects. But the projects that go through the Federal Highway Administration, those are solid. There's a established procedure for how those are spent, and those are absolutely coming. Highway awards are up 35% year over year. That's definitely a sign that in the next 6 to 9 months, those dollars are flowing through. There's some evidence that it's going to be deflated a bit by inflation, right? So the cost of labor is definitely the biggest component there. But on the other hand, you're seeing some relief on the fuel costs. So it's actually flowing through to the bottom line a lot better than was feared, we think, going forward.
Yeah, I want to pull on this third about the stocks, and I also want you to give us your top pick in the space. So I'm looking at Martin Marietta right now. We were just showing it to the viewers as well, up 31% year to date. You have a price target of 431. It's actually below where it's trading at right now. So where does it go from here? How much more upside can a stock that has nothing to do with artificial intelligence but still up 31% year to date? How much higher can it go in a market that's so focused on mega cap tech?
No, absolutely. Look, I can only speak to what I know, and I can't say where things, are going to conflict with our stated price target. I just think that, like I said, it's become evident over the last couple of weeks and even months that the upside to volumes is going to be there. And like I mentioned, residential has become less bad than feared. On the private non-res side, we're all fearing higher interest rates. I'm still convinced that that's going to have some impact. It always has. But the market's holding up much better than expected on the construction side. All of our channel checks are saying that some of the data center activity, even warehouses are slower to roll off than feared. So I think there's upside to volumes from what we've expected, and there's upside to pricing even. The first quarter, these companies posted massive price increases of double digits, and we think there's actually a bit more down the road.
All right, so I know it's a rising tide, and it might lift all the boats here, but do you have one pick that investors should really focus on as the biggest beneficiary?
Well, they're all really big beneficiaries, but if I had to pick one, it is Martin still, because they have huge exposure in Texas. The Texas budget in particular is very big. All of them are large in Texas, but we like Martin in particular.